ESG investing is not only good for the planet and society, but also for your portfolio. In this section, we will explore how ESG investing can help you achieve higher returns, lower risks, and more diversification in your portfolio. First, let's talk about returns. ESG investing can help you identify companies that are well managed, innovative, and resilient to environmental and social challenges. These companies tend to have higher profitability, lower costs, and better growth prospects than their peers. They also benefit from positive consumer sentiment, regulatory support, and access to capital. Studies have shown that ESG investing can generate superior returns over the long term, especially in emerging markets where ESG issues are more prevalent. Second, let's talk about risks. ESG investing can help you avoid companies that are exposed to environmental and social risks that can harm their reputation, operations, and financial performance. These risks include climate change, pollution, human rights violations, corruption, and cyber attacks. By incorporating ESG factors into your analysis, you can reduce the likelihood of investing in companies that face legal liabilities, regulatory fines, consumer boycotts, or shareholder activism. Studies have shown that ESG investing can reduce portfolio volatility and improve risk-adjusted returns. Third, let's talk about diversification. ESG investing can help you access new opportunities and markets that are aligned with your values and goals. You can invest in companies that are leading the transition to a low-carbon economy, providing solutions to social problems, or promoting diversity and inclusion. You can also invest in different asset classes, such as green bonds, social impact bonds, or sustainable funds. By diversifying your portfolio with ESG investments, you can enhance your performance and reduce your correlation with the market. As you can see, ESG investing can help you achieve higher returns, lower risks, and more diversification in your portfolio. It can also help you make a positive impact on the world and support the causes you care about. If you want to learn more about ESG investing and how to get started, stay tuned for the next section of this video. ESG investing is a way of putting your money to work with companies that strive to make the world a better place. ESG stands for environmental, social, and governance, and these are the criteria that investors use to evaluate how well a company is managing its impact on the planet, people, and society. But how do you find and evaluate ESG funds, stocks, and bonds that align with your values and goals? Here are some steps you can follow. 1. Define your ESG preferences. What are the issues that matter most to you? Do you care more about climate change, diversity, human rights, or corporate ethics? Or do you want to balance all of these factors in your portfolio? There is no one-size-fits-all approach to ESG investing, so you need to decide what kind of impact you want to have with your money. 2. Use screening tools to find ESG options. You can use online tools like Morningstar's ESG Screener or Sustainalytics ESG Risk Ratings to filter funds, stocks, and bonds based on their ESG performance. These tools use independent ratings and research to assess how well companies and funds address relevant ESG risks and opportunities. You can also use keywords like ESG or sustainable to search for funds and ETFs on various brokerages and fund platforms. 3. Evaluate the financial performance and risk of ESG options. ESG investing is not only about doing good, but also about doing well. You want to make sure that your ESG choices can deliver sustainable returns and fit your risk profile. To do that, you need to look at some key financial indicators, such as debt-to-equity ratio, price-to-earnings ratio, historical performance, fees, and diversification. You also need to consider how ESG factors can affect the future prospects of a company or fund, such as regulatory changes, consumer trends, or reputational risks. 4. Review the impact report of ESG options. Finally, you want to check how your ESG choices are actually making a difference in the world. You can read the impact report or sustainability report of a fund or company to see what kind of ESG goals they have set, what kind of actions they have taken, and what kind of outcomes they have achieved. You can also look at how they engage with their stakeholders, such as shareholders, employees, customers, communities, and regulators. By following these steps, you can find and evaluate ESG funds, stocks, and bonds that align with your values and goals. Remember that ESG investing is not a static process, but a dynamic one. You need to monitor your portfolio regularly and adjust it as your preferences and circumstances change. By doing so, you can boost your asset growth and construct a better future,